Welcome to our final episode of the General Ledger, and in this session we will now post the totals from our journals to the ledger. Now, just to recap, remember our accounting cycle started with a transaction. From there we got a source document. The source document was entered into the books of first entry, or we can also call them the journals. And now we will post the totals from the journals to the ledgers. Our first journal that we will look at is the accounts receivable journal. And remember, it can be called the sales journal or the debtors journal. So this is when you do sales on credit. So in other words, you will have a customer, your accounts receivable, and you will have sales. Now let's quickly look at the format of the journal. In my first column, I have the date. In my second column, I have the document number. Now remember, when I sell on credit, I will issue a credit invoice. My accounts receivable or my customer, I will have the name there, then my total, and then my sales. So in other words, this journal now must be posted to the general ledger, and we must now follow the double entry system. So what will the first account, now let's start to look at the two accounts involved. My first account will be Sarah. You can see Sarah is the accounts receivable, and my second account will be sales. Sarah and sales. But when we post from the accounts receivable journal and all the other journals, we use the end of the date. We don't look at the specific date of the transaction because we will only post the totals. So in other words, I will have, instead of Sarah, I will have an accounts receivable account, and I will have a sales account. All right, let's look at my sale or my accounts receivable account. I now need to see where's my debits and where's my credits. Accounts receivable, this is the person that owes me money, so he will be seen as an asset. And if I sell to that person, he will owe me more, so my assets will become more. So I will enter this transaction on the debit side. So on the debit side, remember, on the last day of the month, we are working in March, so we have 31 days. My details will be sales, and my amount is then 15. Let's say I had two transactions, then I will only post the total and not the individual transactions. Now we go to sales. We will do exactly the same. Remember, sales is an income. It increases on the credit side, and I have 1,500. Am I still in balance? I have a 1,500 on the debit. I have a 1,500 on the credit. So in other words, if I look at my journal, my total relates to my accounts receivable. Receivable is 1,500. There's my 1,500. My sales is also 1,500. There's my 1,500. So this is the posting from the accounts receivable journal to my general ledger. When I look at my accounts payable journal, I will find that I have more columns than the accounts receivable journal. And this is because you could do purchases on credit, but you could also buy something else on credit, such as stationery. So I will have two more columns. I will have sundries and the details. In the sundries, I will add my amount, and in the details, I will only tell on what did I spend that money on, or what did I buy on credit. So first of all, let's look at the account names that will be involved. I will have purchases, I will have a stationery, and I will have accounts payable. So in this instance, with the accounts payable journal, I will have 3 accounts. Now let's quickly start to do the first one. I have accounts payable, then I have purchases, and I have stationery. All right, we have our account names. Now we need to look at the debits and credits. Accounts payable is a liability, so it increases on the credit side. So whenever you buy from someone on credit, your debt will increase. So I will add that or enter that on the credit side. Remember, we use the last day of the month, so that will be the 31st of March. My details. Now, because I'm working with purchases and stationery, I will have 2 entries. So my first one will be purchases, and my amount is 1,000. My second one will be stationery, and it will be 800. Now let's look at the purchases account. Remember, purchases is what you buy in order to resell. It increases on the debit side. So I have my 1,000 on the debit side. My contra account is accounts payable, and my date is the last day. Stationery, a form of an expense. I have my amount 800. It's coming from accounts payable, and my date is the 31st. Let's quickly see if we are still in balance. We have on the credit side 1,800. I have on the debit side 1,800. If I look at my accounts payable account, my contra account is purchases. There's my purchases. My contra account, I have stationery. There's my stationery. If I look at my purchases account, my contra account goes to accounts payable, and also stationery also goes to accounts payable. When we look at the purchases return journal, and you will remember we can call the purchases return journal also the return outwards, because the goods are now going back to the supplier store. When we look at this journal, you will see that we have date, document, accounts payable. This is the name of the person that you bought from. You have a total column, and you have purchases, sundries, and details. Now remember, when we looked at the purchases journal, we also had the sundries and details, and in our example, we bought stationery from Waltons. Now you must make sure when you do a journal such as the purchases return journal or any other journal, that your total column is the total of all the other columns. So in this scenario, we only have 2 columns. We have purchases and we have total. So purchases and total must be equal. Now let's quickly look at the 2 accounts that we need to create in the general ledger, and I will immediately see that I have accounts payable, and then there's a purchases. But remember, because this is a purchases return journal, I will not create a purchases account. I will rather create a purchases return account. Return account. All right. My other account is then accounts payable. Accounts payable. And remember again, we only post totals, and we do that as on the end of the month. All right, let's look at purchases return. Purchases is normally on your debit side. You will remember PEA of polls, purchases on the debit side. So when we return purchases, we must reverse that entry, so then it will go to my credit side, and my date will be the 31st. My contra account is accounts payable, and my amount is 600. If I look at my accounts payable increase on the credit side because it's a liability. But now that I returned goods to my supplier, I will owe them less. So in other words, it will go to my debit side. My contra account is purchases returns, and my date is the 31st. Let's look at my details in my different accounts. In my purchases return account, my details refer to accounts payable. And in my accounts payable account, I refer to my purchases returns. When I look at my sales return journal, it's basically the same as the purchases return journal. It's now only while in the purchases return journal you returned goods to your supplier. In the sales return journal, some of our customers returned goods to our store. And this is why we can also call this the return inwards journal, because the sales that we made is coming back to the store. If we look at the different accounts involved, you will see that I have an accounts receivable that refers to my customer, and I also have sales. But remember now, it's their sales returns. So instead of opening a sales account, I will create a sales return account. And now remember that there's different terminology to describe a sales returns account. All right, my second account will be accounts receivable. Remember, once again, we only work with totals. Although we only have one entry now for Sarah, if we had 2 or 3, we will still only work with the totals. Let's quickly look at the debits and credits. In our sales returns, sales normally increase on the credit side, you will remember, but if it's a return, it will increase on my debit side. My amount is 500. My contra account is accounts receivable, and my date always the last day of the month. If I look at accounts receivable, that is a debtor, normally increase on the debit side, but now that Sarah returned goods to us, she owe us less, so it will decrease, in other words, and that will happen on the credit side. My details refer then to my contra account, and I have my date. Now we can quickly look at the account names and the details. My details in the sales returns refer to my contra account, accounts receivable. My details in the accounts receivable refers to my other account, which is sales returns. We are now doing the cash payment journal, and you'll remember that we said the cash payment journal and the cash receipt journal, both, if we add them together, if we combine them, it's known as the cash book. My cash payments will be on the credit side, and my cash receipts will be on the debit side of my cash book. But let's look at the cash payment journal. Let's see if we can identify the accounts. My accounts will be bank. My account will be supplier. And then I also have salaries, because I paid salaries from the bank. And you will also see in the cash payment journal that I have more columns than the sales and purchases journal. And this is because we can make payments to different people. If my business is making payments to if I'm making payments to various people, then I will just add more columns. Now in my scenario, I only have salaries and I have suppliers. Now in a cash payment journal, you will always have a suppliers column, because you will frequently pay your suppliers. You will always have the bank because this is then your total, and you will always have purchases because you can and you will definitely buy or purchase goods with cash. Now we have our 3 accounts, and I'm quickly going to open my 3 accounts. I have bank, I have supplier, and then I have salaries. All right, let's look at the bank. We said the bank, the cash payments are on the credit side. So on my credit side of the bank, I will have, on the last day of the month, I will have various payments. Now, instead of posting each one separately, I will only say total payments. And my amount for total payments will be in my bank column, which is 1,300. Now I must do my debit entries and suppliers. Why do I debit my suppliers? Because I paid them, so I owe them less than yesterday. I have a 500, whereas my contra account is in the bank, and I use the 31st of March. And the same will happen with my salaries and expense on the debit side. Contra account is bank, and it's the 31st of March. Let's quickly look at my details in my different accounts. My details in the bank account refers to my total payments. So that refers basically to my suppliers and to my salaries. My details in the suppliers account refer to my bank, and also in my salaries account refers to my bank. My cash receipt journal, again, this is part of my cash book. Cash receipts will be on the debit side, because if I deposit money in my bank account, my bank will have more money than yesterday, so it will increase, and assets increase on the debit side. Now let's quickly see if we can find the accounts involved. I will have a bank, I will have customers, and I will have sales. Now maybe you can be confused now because I have customers and I have sales. Now remember, in my bank account, if I paid a customer, or a customer paid me rather, this means that he paid something on his account. So he bought from us on credit, and this is a payment on his account. When we have sales in the bank, it means that our customers bought on cash. So we received the cash immediately. My customers column refers to my credit customers. My sales column then refers to my cash sales. So in other words, you can now see that I will have 3 accounts. I will quickly open my 3 accounts. I have bank, I have customers, and I have sales. Let's go back to the bank. What did we do with the cash payment journal? Instead of posting each and every transaction individually, I will only post the total, and the total is 1,300, and I will write total receipts. Remember, my date is the 31st of March. Then if I go to my customers, my customer is a form of an asset which increase on the debit side. But since my customer made a payment, he owe us less than yesterday, so we will decrease, and we will do the decrease on the credit side. My contra account, or the double entry, is in the bank, and I have my date. Now the same with sales. In this case, I sold for cash. The cash is now in the bank, and my amount is 800. Let's see if we are in balance. I have 1,300 on the debit. I have 1,300 on the credit. Let's quickly go and look at my details that I used in the accounts. My bank referred to all the amounts that I received. In my customer's account, my details refer to my bank, which is the contra account. In my sales account, my details refer to the bank, which is my contra account. This is then the posting from the journals to the ledgers. Remember, there's a few steps that you need to follow. You only post the totals of the totals of the journals will go to the ledger. You do that at the end of the month, and you must ensure that your debits equals your credits. Our next session, I will show you how to balance a general ledger account, and we will also briefly talk about the different types of general ledger accounts.